investing as an expat, what you need to know before you start. Living abroad can be exciting, new opportunities, higher income, and maybe even lower taxes. But when it comes to investing as an expat, things can get pretty complicated, certainly from my experience. You got different tax laws, you got currency risks, and offshore structures can either work for you or against you, depending on your situation. In this video, I'll break down the key things that every expat needs to know before investing overseas, from tax traps to hidden costs to smart portfolio strategies that actually make sense when you're living abroad. So let's get into it. The big picture. Why expat investing is different. When you move overseas, your financial situation changes in ways that you may not expect. Your income might be in one currency, your expenses in another currency, and your long-term goals like retirement could be somewhere else entirely. You might be getting paid in USD, you might have expenses in GBP, and you might be planning to retire in Spain in Euro. So that means currency exchange, banking laws, and tax residency all play a role in how you should invest. Unlike domestic investors, expats often lose access to certain funds, like ISAs or brokerage accounts back home. So you have to think globally, not just about returns, but about flexibility, reporting, and compliance. Now, some of the common pitfalls that expats fall into, this is going off of I've been in this space for a long time, is that they ignore tax residency. Just because you live abroad doesn't mean your home country forgets you as much as you may want them to. Some countries still tax global income. The US is one big one, for example. Mixing currencies. This is a huge one. If you just look at any kind of currency charts over a long period of time, you'll see how much they fluctuate. So earning in USD, spending in Singapore, SGD, where I am, and investing in GBP without planning or currency fluctuations can eat into your returns. Trusting the wrong platform. There are plenty of offshore options out there marketed to expats, but some have hidden fees and long lock-in periods. Always check liquidity, exit penalties, transparency before starting one of these investments. And also, just make sure that it's the right fit for you. Also, I would say not planning an exit strategy. What I find, most expats eventually move again or they go home. There's very few that stay in the one place for the whole of the rest of their life. It happens, but it's not that common. If your investments aren't portable, you could face restrictions or surprise taxes when you relocate. So, smart expat planning strategies would be, start with your base currency and goals. Are you retiring in your home country or abroad? Invest in currencies that match your long-term spending needs. Use reputable global regulated platforms and make sure the person advising you has got adequate credentials. Diversify across different asset classes. That can mean, bonds, equities, cash, alternatives, property, gold, wine, whiskey, private credit, always within a regulated structure though. That's the key. It's really down to you, and make sure you always do your due diligence. And then, get professional advice tailored to your jurisdiction. Tax and investment rules for Americans, British people, Australians, Europeans, Japanese, Chinese, they differ massively when they move overseas. So, investing as an expat can open up incredible opportunities, more fund access, different diverse opportunities, but it's not something to navigate blindly. With the right structure, diversification, and long-term plan, you can grow your wealth globally while protecting yourself from tax traps and high-fee products. If you found this breakdown helpful, hit the like button, hit the follow, hit the subscribe, and you can also drop us an email at info@expatmoneychat, do pardon me, and we'll keep you updated with insights on money and markets, and drop a comment, let me know your thoughts. Thank you for watching, cheers.